Let's bring in Nicolas Owens, industrials equity analyst at Morningstar. Nicolas, you've seen a little bit more information, I'm assuming, since you put out that note. We now know the price of $135, $1.77 trillion valuation for this company. Do you think once it goes public, it will re-rate to that $780 billion?
Actually, I doubt that very much. I think it'd be great for me to be able to explain that 780 is basically the weighted average of three scenarios. And there's a few things you have to believe will go right for the company. Priced for perfection in this upside scenario where Starship is reusable and satellites in space are commercializable, we see a $1.9 trillion valuation. So priced for perfection, it's 154. But that's not the most probable scenario in my view.
So what's the probability of that scenario, the moonshot scenario, if everything proves out with Starship and orbital data centers? What's the likelihood of that happening, and when do you think?
So that's the thing. We assign it right now a 7% likelihood because both have to go right. And we will know more about these projects, let's say, in the next 2 to 3 years. But investors in the IPO are being asked to decide next week whether what they think is going to happen. And so at the end of the day, by weighting those different probability scenarios, we ended up with the 780 billion. And we think that given everything else that's likely to happen in the next 2 to 3 years, that people will have an opportunity to get a better margin of safety than they're likely to see on the day of the IPO or even in the weeks right after.
Yeah, but it's a Musk company, and when it comes to that, it's just a different animal than I mean, you can look at Tesla for some comparison. We don't know what exactly he's going to do. We don't know what pivots he'll make. We don't know whether he's going to put this thing together with Tesla in a year's time or something like that. I mean, I understand where you're coming from on a numbers basis. I'm just not sure it matters that much.
Well, what I'd like to say is I acknowledge the two things. First, we think that this company has a moat, certainly with the way they've built and designed their rockets and the way they've iterated through launching thousands of satellites. They have a cost advantage, and I don't think that there's any likely competitor who's going to be able to catch up given the rate that they're going. Starship working and scaling is an important part of continuing that. And if you look at the main project here, this AI play for data centers in space, and as you mentioned, there's a handful of other things in the works there, but let's focus on that one. I can't think of any other company that has a reasonable chance of achieving that, right? So scaling that using the launch cost advantage that they have. So I would argue that it's hard to capture some of what you're saying. It's like, what is the Musk factor? I would phrase that in terms of there's a positive, non-0% probability that this will all work out.
There is a notion that as far as Musk's businesses go, he's being schooled in EVs by BYD. He's being schooled in autonomous by Waymo. He's being schooled on LLMs. Grok is an also-ran. He's being schooled in social, Twitter versus all the other platforms. I wonder if you think this could be the one space where he asserts and maintains dominance.
Well, I would say of the three business lines that the company has today, the rockets and the Starlink satellite are the strongest. And I would say he's winning, and the company's winning in those markets. The AI is in my view, undeterminate at this point.
What about the technical elements of the IPO? I think about just the minuscule float of 4% that they're putting out there, the fast tracking of index inclusion, the Musk retail following, as David was alluding to as well. I mean, how as an analyst do you think about just the technical elements of that as you think about whether this is a company that's overvalued at 1.8 trillion?
Great question. So I would simply summarize that by saying the market conditions are primed for this. The supply and demand for these shares, I think, is in favor right now of, there's going to be more demand than supply, and that's probably why they locked in the price without even dealing with a range. And especially given what you mentioned about lining up index, funds to buy it in a couple of weeks, those are rational moves to manage the supply and demand. on the back of that, in the next 180 and 360 days, there's more supply. And that's part of one of the risks that we identified in the report.